the hidden system Warren Buffett and NFL QBs rely on to win. After studying both football strategy and market psychology for years, I've discovered something fascinating. The mental frameworks that separate elite quarterbacks from average ones are identical to what separates consistently profitable investors from the rest of the pack. It started when I noticed how Peyton Manning read defenses at the line of scrimmage. The way he processed information, adapted in real time, and executed under pressure mirrored exactly what the best traders do when markets get volatile. The more I dug into this parallel, the more I realized it wasn't coincidence. It was systematic. I'm going to break down the 5 core mental strategies that both championship quarterbacks and successful investors use to consistently outperform their competition. These aren't feel-good analogies. They're actionable frameworks you can apply immediately. The game of incomplete information. Both football and investing force you to make critical decisions with incomplete information under time pressure. The difference between success and failure isn't having perfect information. It's having a superior decision-making process. Watch Aaron Rodgers approach the line. He's scanning the defense, identifying the potential blitz, and calculating risk versus reward on different route options. He has maybe 25 seconds to process dozens of variables and commit to a decision that could determine the game's outcome. Now watch Warren Buffett during the 2008 financial crisis. While everyone else panicked, he calmly deployed $15.6 billion in strategic investments. Same cognitive load, same pressure, same need for systematic decision-making under extreme uncertainty. The 5 mental frameworks champions use. Framework number 1. The pre-snap read, preparation over prediction. Elite quarterbacks don't try to predict what the defense will do. They prepare for what it could do. They study film until they can recognize formations instantly and know their best response to each scenario. The investing parallel. Warren Buffett doesn't try to predict market movements. He prepares for multiple scenarios. Before Berkshire Hathaway enters any position, they've already decided their response to various outcomes. This preparation eliminates emotional decision-making when pressure mounts. Framework number 2. The pocket presence principle, composure under pressure. Tom Brady's greatest skill wasn't his arm strength. It was his ability to remain calm in chaos. While pass rushers charged at him, he kept his eyes downfield, stayed patient, and found the open receiver. The investing parallel. Buffett demonstrated this perfectly during the dot-com crash. While others panic sold, he maintained composure and stuck to his value investing principles. The result? Berkshire's stock price recovered faster and stronger than the broader market. Framework number 3. The audible system, adaptation strategy. Great quarterbacks read the defense post-snap and adjust their strategy in real time. The play call was one thing, but the actual execution adapts to what's happening on the field. The investing parallel. Markets change. What worked in a bull market might fail in a bear market. Buffett adapted his strategy over decades, from cigar butt investing in the 1960s to quality growth companies later. He maintained core principles, but adapted tactics as conditions evolved. Framework number 4. The risk-reward calculation, when to take shots. Championship quarterbacks know when to take calculated risks. 3rd and long. Time to take a shot downfield. Up by 14 in the 4th quarter. Time to manage the game and avoid turnovers. The investing parallel. Position sizing is everything. When Buffett has extremely high confidence, he sizes up significantly. Coca-Cola and Apple became massive positions because his conviction was backed by thorough analysis. But he also knows when to stay conservative and protect capital. Framework number 5. The game management mindset, long-term thinking. Elite quarterbacks don't try to score on every play. They manage the game methodically, taking what the defense gives them, controlling field position, and wearing down opponents over 4 quarters. The investing parallel. Buffett's greatest insight is that wealth building isn't about hitting home runs every time. It's about consistent execution and letting compound growth work over decades. His average annual return of 20% over 57 years came from patient, systematic decision-making, not spectacular individual trades. Now, let's talk about the support system. No quarterback wins alone, and no investor should operate in isolation. Championship teams have specialized coaches for every aspect of the game. Your investment coaching staff might include a mentor or advisor who's been through multiple market cycles, a tax professional who optimizes your after-tax returns, and a estate planner who protects your long-term wealth, a risk management system that keeps emotions in check. There's also an execution advantage that most people miss. Both football and investing reward consistent execution over flashy plays. The Patriots' dynasty wasn't built on spectacular individual performances. It was built on making fewer mistakes than their opponents, game after game, year after year. Buffett's approach mirrors this perfectly. He's famous for saying, Rule no. 1. Never lose money. Rule no. 2. Never forget Rule no. 1. His fortune wasn't built on spectacular wins. It was built on avoiding spectacular losses while making consistent, intelligent decisions over 5 decades. Now tell me, what will your playbook be? Whether you're reading a defense or reading a balance sheet, success comes down to the same fundamentals. Preparation beats prediction. Study your opportunities thoroughly before committing capital. Process beats passion. Systematic decision-making outperforms emotional reactions. Patience beats pressure. Long-term thinking gives you advantages that short-term players can't access. Adaptation beats stubbornness. When conditions change, be ready to adjust your approach. The best part, unlike football, in investing there's no salary cap, no draft lottery, and no off-season. The market opens Monday morning, and your systematic approach is your competitive advantage. What's your game plan going to be? Let me know in the comments. If you like this type of content, let me know by giving it a like. I'll do my best to keep it coming. Also, be sure to subscribe to my Substack at https://stockmarketsentinel. Substack.com/. It's free to sign up, and you can decide whether you want to upgrade to the paid tier later. Peace and profits all.